Welcome to today's More Report. Chart analysis videos on Friday 4th of January with me, Rich, market analyst at Hantec Markets. It is Payrolls Friday, however, that's not really the big focus today because what we've seen overnight is the fact that risk appetite has improved. You've had suggestions from China that they're going to be holding trade talks on the 7th and 8th of January with the US trade delegation on a vice ministerial level. So that's helped to improve sentiment there. But also we've got not only payrolls this afternoon, but also the Fed Chair Powell speaking for the first time this year, and that will obviously take a big focus as well. So first of all, looking at markets, what we have got is a fairly risk positive response actually to this China news overnight, adding to the fact that China also came in with a positive tick higher on the China Asian Services PMI, so that has sort of added into this air of positivity, and you can see that through the fact that the yen is a key underperformer, but also the dollar is weaker across all the forex majors today, and that is classic risk appetite renewal there. We're also seeing gold ticking a shade lower, also silver, but also look at this oil price jumping 1.8% higher on oil, and that's helping to sort of start to generate potential for a little recovery. There's obviously a lot of overhead supply still around the 40 to 50 bucks area on WTI, but prospects there of a potential recovery in oil that's helping markets. We've seen treasury yields which have bounced, having been strongly lower, seriously strongly lower, but treasury yields are higher today, and that's helped markets. And you look at US futures, they're around about 1% higher, and that is pretty much where we see European markets today. So interesting rebound on markets in the early moves. Now, as I said, you've got payrolls today, so that's going to be something we need to obviously consider later on this afternoon, 1:30. Headline expected to be 177. You're also expected to see unemployment sticking at 3.7% and average hourly earnings just a shade lower to 3%. So no real great shakes expected in the data, and it could be another fairly sort of muted response there, given the fact that just an hour and a half later we've got Jerome Powell, the Fed chair, who is set to speak, and the markets I think will be focused on what Powell has to say this afternoon. So now looking at other data points, we've also got the Eurozone flash inflation data expected to just unwind a touch to 1.8% from 2%. Core inflation expected to stick at 1%, and also we've got Canadian unemployment this afternoon, 5.7% expected there, and the EIA oil inventories. So lots to consider this afternoon. So my chart today is the Canadian dollar. Now, I did speak about the fact that oil price has been starting to sort of show signs of a little bit of recovery, and subsequently with the dollar looking a little bit more corrective, we've seen the Canadian dollar against the US starting to strengthen, and that has pulled sharply lower in this dollar CAD chart within this uptrend channel, I might add, and the move is just basically unwinding it back towards the 33.85 breakout level, which is around about where the basis of support from that trend channel comes in. You've got support between 33.20 to 33.85. That is a pretty decent band, and we could see the market back into that band of support. Now, how we see the technicals reacting? Well, they've gone sharply into corrective mode. Certainly near term, the stochastic sell signal, MACD sell signal, RSI 47, that is below the level of 50 where we've seen the dollar CAD previously. So that is suggesting that if the market closes in this, it's looking increasingly corrective, and the Canadian dollar is regaining some ground, certainly pulling it back towards, as I said, 33.85 to 33.20 potential there. Now you can see that this morning the market had been consolidating, but as the European session has come into force, we've seen another acceleration lower. So you've got initial resistance 34.95, and that's underneath the overhead supply around this 35.60 area of support. So and any intraday rallies I think on this dollar CAD chart I think are a chance to sell again on a near-term basis, and if the market breached that support at 33.20, it could turn increasingly corrective. So this is a move that we need to keep an eye on now. So with that in mind, I wish you good luck in your trading, and I'll speak to you later.